So guys, the new month is officially upon us, which means that it's time for another dividend portfolio update. And this is the third month in a row that we're sitting at yet another all-time high. In this video, guys, I'm going to show you everything, like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in November. But before we get to that, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? Anything that happened to you guys this last month, I want to hear about it in the comments below. Anyway, getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download the spreadsheet in the description of the video. And what we're looking at here is just my main taxable brokerage account over here on Charles Schwab, which we can see is currently valued at $68,858.50. And at this point in time, every single year, this portfolio is generating $2,626 of dividend income, which breaks down to almost $219 every single month and $50.50 every single week. And going back to the account value for just a moment, this number right here is about $500 higher compared to our portfolio update from this time last month. And here's the thing, guys, every single month I'm contributing about $500 to this account. So taking that into consideration, plus my dividend income for the month, I'm actually seeing some share price losses in this account for the month of October, which is the first time that that's happened since like June. And if we look at the breakdown for the month over here on Snowball Analytics, which outside of my free spreadsheet is my go-to portfolio tracker. And if you're looking for something with, more bells and whistles than your standard spreadsheet, or you're just generally not a spreadsheet person, I know a lot of people aren't, then this is the perfect platform for you. This one's a beast. In the description, there's a link to a 14-day trial so you can take it out for a test drive. And I think you'll be really happy with it. Like I said, it just gives you so much great insight into your portfolio, and I think you'll be really impressed, so definitely try it out. But looking at the breakdown for the month, guys, it looks like in October I was down 0.6%. Looks like I lost about $700 in capital gains for the month, but I did bring in about $261 in dividend income just in this account here, so that's going to result in a net loss of about $430 here. And it was bound to happen at some point, guys. I've said this at least a handful of times, but I feel like the gains have just been coming way too easy all year long, and these last few months have actually been really great. So I felt like it was only a matter of time before we started seeing some contractions here in the portfolio. But still, guys, even though share prices went down, those dividends just kept on rolling in, and it was actually a killer month of income. I mean, like we established, just in this account, I brought in about $261 for the month of October, and then I also had about a $16 payment coming from VU in my Roth IRA. So in total, we're looking at about $277 for the month, and I had quite a handful of really awesome payments. I mean, Vichi's payment for the month was great, $45.41. KRC paid a nice dividend, $41.58. Altria came in hot with a $57 dividend. That was fantastic. And then we had another really good one here from Blue Owl, just over $43. So some really killer payments in October. And overall, if we compare my portfolio's performance to the S&P 500, to the NASDAQ, and to SCHD in the month of October, it looks like I underperformed everything. S&P beat me by about 0.6%, the NASDAQ by about 1%, and then SCHD by 0.5%. And if we zoom out looking at the year-to-date performance, it looks like the S&P is beating me by about 3%, NASDAQ's beating me by 1.7%, really not too bad. And then I am outperforming SCHD by about 3.7%. So there is that. And if we zoom out looking at the 1 year period over these last 365 days, it's really not too different. I mean, the S&P is beating me by 3%, NASDAQ by 3.5%, and I'm outperforming SCHD by 3.8%. So pretty similar to the year to date. So overall, it was kind of a bleh month, but it wasn't all that bad. I mean, there were a couple stocks that took some really big hits, but there was also one in particular that really took off this last month, and that's what we're going to take a look at next. So starting here with my best performing stock for the month, this one was Altria Group. And we're taking a look at its share price performance over here on Snapstock, which you can access when you become a member of the investment club. There's a link to that in the description of the video. But as far as Altria goes, it had a killer month, guys. It was up about 8.4% just in the last 30 days, which was basically a response to their most recent quarterly earnings where they beat on both the top and bottom line. And obviously the market really liked that, and so the share price went up. And Altria's strong performance wasn't just limited to the the last month. If we look at the year to date, Altria is up 36.5%, so it's had a really good year. And if we zoom out once more over the last 365 days, it's up about 43%. So Altria has been crushing it. And as I'm sure you can imagine, my Altria position has certainly been a beneficiary of this strong performance. And taking a look at that, I currently have about 56.2 shares of Altria at an average cost of $42.63. So just in terms of share price, I'm up about 26.8%, and on a total return basis, I'm up about 46%. So this is one of my better performers in the portfolio. And you know what, guys? I thought Altria was my only notably strong performer for this last month, but I totally forgot about Snap-on, which did even better than Altria. Snap-on was up about 16% just in the last 30 days, which, like with Altria Group, this was caused by their recent earnings announcement where, yes, they did slightly miss on revenue, but they beat on earnings per share, which just sent the share price soaring. And with that, looking at the year-to-date performance for Snap-on, this is going to leave it with a near 20% gain so far in 2024. And if we zoom out once more over the last year, this is going to leave Snap-on up about 27.6%. And now just looking at my position, this is one of those where obviously I wish I had a larger position in Snap-on. It's not a huge position of mine. I think it only makes up about 4.5% of the portfolio, but I have about 9 shares at a really sweet average cost of about $211. So the current share price is like 120 bucks above that right now, which is going to leave me with a really nice share price return, about 57.2%, and an even better total return. I'm up almost 64, well, let's just call it 64.5%. And this is definitely one of my top performers. I actually think it's number 3 behind Williams-Sonoma and behind AbbVie up here, who's also doing really well. AbbVie's up 88.4%. But anyway, guys, those two stocks did really well for me this last month. And now on the other hand, in terms of poor performing stocks, Williams-Sonoma, of all companies, was my worst performing position in October. It saw a pretty big drop, down 10.3% just in the last 30 days. And there was no crazy company-specific news to explain the drop. It just kind of happened, as it sometimes does. But if we zoom out looking at the year-to-date performance, this is still going to leave Williams-Sonoma in good shape. They're up 39%. And if we zoom out once more over the last year, they're still up 80.3%. So definitely nothing to worry about there. And then moving on to my other poor performer of the month, this one was WP Carey. This stock was down about 7% in the last 30 days. And if we zoom out looking at the year to date, this leaves WP Carey down even more. The stock is down 12.1% in 2024. And zooming out over the last year, it's still up a little bit, really nothing to write home about 5.8%. And looking at my position real quick, WP Carey is the only stock in my portfolio where I'm seeing a loss. Fortunately, this isn't a huge position of mine. I think it's maybe mid 2%, but I have 38.1 shares at an average cost of, $65.33 here. So the current share price is about 10 bucks below my cost basis, which is going to leave me down 16% in terms of share price and 6% including dividends on a total return basis. All right, guys, now getting into all of my buys for the month, it was a very straightforward month of buying. The only individual company that I added to was Clear Secure, ticker symbol U, which is the newest addition to my portfolio. I started buying shares of this company back in mid-September or towards the end of September, so relatively new position in the portfolio. And in October, I added 20 shares to my position at an average cost of $34.33. Now, in addition to that, I made my weekly contributions to SCHD and VU, and in the month of October, this is adjusting for SCHD's split, I picked up 14.85 shares at an average cost of $28.31, and for VU, I added a third of a share basically at $530.89. So like I said, very simple, very straightforward month of purchasing, and I would imagine that November will look much the same. And with that, guys, now moving on and taking a closer look at my Roth IRA, looking at my Margarita money portfolio over here. This is currently valued at just over $14,000, a new all-time high in the Roth. It's sitting at $14,018.67, and the last month was pretty uneventful. In total, I only gained about 140 bucks, up 0.4% for the month, so nothing too shabby there. And if we zoom out looking at the year-to-date performance, this is going to leave the Roth in pretty good shape. Here in 2024, it's up 18%, so things are looking pretty good. Now, looking at at my combined portfolios here, if we take my main taxable brokerage account, which is valued at $68,858 and is bringing in $2,626 of dividends every year, and add that to my Roth IRA at just over $14,000, and this account is generating $362 of annual dividend income, that's going to bring my combined portfolio value to $82,876, and every single year, I'm bringing in $2,988 of dividends. That is fantastic, and this is actually a $42 gain in projected annual income compared to this time last month. So we're making some great strides there, and this month, guys, we are hitting $3,000 of projected annual income. I'm calling it. We're less than $12 away. We are 100% going to get there. There's nothing that can stop us at this point. But anyway, guys, looking at the year-to-date income gain, so far in 2024, I have added $515 to my projected annual income. We started out the year at $2,473. Like I said, we're going to hit $3K this month. Might even get to $3,050 by the end of the year, just depending on how things go. So overall, 2024 has been a really solid year of adding more income to this portfolio. And like I've said at least a handful of times, dividend investing really is the gift that keeps on giving. It's one of those things that just gets better the longer that you do it. And I feel really fortunate to be able to continue making strides in this portfolio. And I am so stoked to see where it goes from here and to see where we finish out the year. Now, my friends, as far as my watch list goes, I actually didn't make any changes to this list in the last month. No additions, no subtractions, but I will say 2 stocks on the list of stocks that I'm very interested in are looking a little bit more interesting. Zoetis and Rollins both saw some declines in the last month. Zoetis with a big drop of 7.8%, and Rollins, not the biggest drop, down about 4% for the month, but we'll take it. I just hope this one keeps inching down, guys, because this is my great white whale. This is the one that got away, and I'm trying to stay patient with it. I would love to add this to the portfolio. I'm just foaming at the mouth to get it in there, but I'm still holding out for lower prices, and so I'm hoping that this trend continues. And with that, guys, if you want to learn about some more stocks that are also looking very interesting right now, then check out this next video right over here. In this one, I'm telling you about 4 dividend growth monsters who are not only growing their dividends at very aggressive rates, but that dividend growth is actually speeding up over time, which is a true work of art. So click right over here to check those out, and I'll see you in the next one.